Hello everyone, welcome back to another episode of the Startup Operators Weekly Roundup. I wish everyone a very happy Holi and I hope you had a great celebration. I'm sure for a fact Roshan had a great time this year celebrating
course.
Holi after 2 years.
After 2 years, right? I mean,
Yeah.
fantastic. Yeah, and we used organic colors also, so which is why my face is not pink or blue.
Yeah, and the powders are also really great, really organic. But I think
D2C brands, huh?
D2C brands. But I think in a few years' time we'll be back at throwing eggs at each other.
Hopefully not. Hopefully not. I'd hate to go back to those times, but yeah, it's been an interesting week, right? And I've just been reading a few interesting stories also in the media about people's holy celebrations, about somebody got a new car and someone else decided to spend their vacation whatever way. I don't know why these stories are back in vogue. I mean, this was the case around 7-8 years back when there wasn't much to write about the Indian startup ecosystem. But again, for some reason, I mean, these kind of social page three type of pieces are doing the rounds, right? I mean, I'm not a real big fan of that. I mean, I see it on my timeline in passing, and it just strikes me as odd, because what does it have to do with technology or startups? And I really, really hope that media organizations go beyond all of this stuff, right? Because it's just distraction, really. Talk about the business, talk about why someone is special, how an innovation works, how is it significant for the market, and so on and so forth. And really, I mean, the reason why we started the roundup was for that, right? Because what the media used to tell you was, hey, someone raised 15 million or 20 million or 50 million. But I mean, what we are trying to do is like try to understand why that is the case, why is the business special, how are they executing, how are they operating, and what can you learn about it, right? So I really hope that there are more of those kind of stories.
Yeah, but it was a good change. I mean, usually this is the time when a new wave of COVID actually hits us. But this time, luckily.
So the fourth wave is projected for August, apparently. Yeah. But I really hope that it's like super mild, and I already think that to an extent it's become a bit endemic. But these variants can be tricky, right? I mean, let's hope. I mean, we're through, man.
Yeah,
I mean,
hope we are back to some sort of normalcy.
I'm really done with this nonsense. Yeah.
So in this week's roundup, we'll be talking about the new reform that the government is likely to introduce in next fiscal year to the capital gains tax. Apart from that, Amagi is the latest unicorn that entered the coveted club. And we have been hearing news that the government has been raiding a few of the founders' cases in Mumbai. So with that, let's get started. So to boost revenue collection and spending for welfare programs, the government most likely to introduce reforms to the capital gains tax structure. Currently in India, long-term capital gains on listed equities is taxed at 10%, whereas on short-term capital gains on listed equities are 15%. And in the case of unlisted shares, the applicable tax slab is applied. Now, the philosophy for the government for doing this is that passive income, which is earned from the capital markets, should not be taxed at a lower rate from jobs that require more effort into it. For example, entrepreneurial risks and job creation. So where do you stand with this development?
It's very interesting, I mean, you can look at it from the government side as well, because we need to raise a lot more money because there's been a lot of welfare because of COVID and stuff, and this welfare will continue as well. And the government feels that this is the kind of capital that doesn't really generate any jobs, I mean, employ people, and also it can also induce a bit of a wealth gap, right? It's a money make money kind of a situation, and that is their perspective of how they're viewing it. Obviously things are a lot more complex than that, right? I mean, having said that, I will say that long-term capital gains in India is on the lower side, right? I mean, it's around 10 to 15% depending on whether it is equities or debt or real estate and so on. What we don't want is investors deciding how lucrative an asset is based on the tax structure, right? I mean, that is something that none of us want. They should invest in productive assets. They should invest in assets that make economic sense. To that end, I mean, I hope these things are weighed. And also there was a very interesting article by the former revenue secretary on how the tax slabs need to be simplified, and that I think pretty much anyone on any side of the aisle can agree on that, right? I mean, it's fairly complicated at this point of time, but let's see. I think around 60 to 80,000 crores was the projected revenue supposed to be raised from long-term capital gains for the fiscal, right? Which is a significant number again. Yeah, I mean, I hate to say it, but I guess it was on the expected lines. Yeah.
But I mean, over the last 2 years, we have seen how the capital markets, flourished, right? And this really acted
Yeah.
for India became very lucrative for foreign investors.
Yeah.
But now with reforms to the slacks, I'm assuming the rate should be going higher. But isn't this more of like a second order taxation which is coming to shareholders because the business itself is paying taxes to the government?
No, there are nuances to this, and it's not just foreign investors, right? I mean, look at the way Indian investors have grown over the last 2-3 years, post COVID especially. Around 2020, I think it was around 5 crore investors registered with BSE, and that number is right now 10 crores, right? It's
Thanks to
doubled.
all the investment platforms that have come out.
Exactly, the fintechs that we've spoken about and so on. And it's not just listed, right? I mean, you have capital gains on unlisted shares also. Like, for example, we have ESOPs, right? And, I don't know if ESOPs qualify as the same thing, but shareholding even in private companies also are taxable under long-term capital gains, right? And now this is not exactly passive, right? I mean, obviously, as a business owner, you employ people, and the gains that you make out of that also is taxable. So there are a lot of nuances to this, and there are more intelligent people than you or I to advise the government on this stuff. But I just hope that money flows into the right productive assets and that it has a compounding effect. Yeah.
Right. So in the last 10 days, the income tax department had also conducted raids on two major players, which are Intramarket and Zetwork, both operating in the B2B marketplace. The search operations for Intramarket were related to unpaid taxes by some suppliers, and IT officials had swooped in on the offices of the co-founders, who are Shovik Sengupta and Aditya Sharda. A report by Money Control stated that the IT department found no unaccounted cash or assets at any of the premises. Zetwork, on the other hand, whose officers and founders' residential premises were raided on suspicion of tax evasion, they did find some incriminating materials, but these things are currently on hold for further studies. It's very interesting, the entire timing of the raids, right? We have seen how the Indian startup ecosystem has grown, at the pace at which it has grown. And now with the fiscal year coming to an end, it might raise some questions.
No, the fiscal targets are not just for startups, right? I mean, even the tax collectors have this targets, and it's a weird problem, I mean, if you give a incentive on tax collections to someone, I mean, obviously they will go out of the way to gather that, right? And it's a huge inconvenience, right? I mean, when you have officials at your premises, I mean, business halls, I mean, there are plenty of compliance and all of that stuff that you have to adhere to. And, prima facie, it feels like they haven't really found anything, which is like a testament to, the corporate governance maybe that these folks have, right, in place. And it's hard. I mean, they're growing at breakneck speed, right? I mean, Zetwork, I think, became a unicorn in about 2.5-3 years' time. Inframarket also is probably a unicorn, I suppose,
Yeah,
right?
Intramarket.
And they work in this whole B2B marketplace, which is like trying to streamline a very, very fragmented sort of industry. And it's really hard. There are certain allegations and whatnot that, there are inflated invoices and so on. We've seen that earlier with, some of the other marketplaces as such. But yeah, I mean, there are, very high profile auditors in both their companies. And I'm not sure if they would have missed anything like this. I really hope that, they're able to come out of this and really move on with business, because as you mentioned, it's the financial year end, right? And this is a time when everyone's all hands on deck. And I just hope that we're able to move on seamlessly from this.
No, these companies have also raised large amounts of money in funding. For example, Intramarket, they have raised total of $356 million, right? And they turned unicorn in February last year. In December, Zetwork had raised $210 million, and they are growing at 3x year on year.
Yeah, phenomenal.
Right? And they're expected to at least grow 3x in this fiscal as well.
Crazy.
Continuing from last week's news on Zomato, they recently announced that they have had an all-stock merger with Blinket, and following this deal, Blinket will be valued somewhere between $700 to $750 million. Now, as part of this deal, Zomato would also loan $150 million to Blinket for the near-term capital needs. And in August, Zomato acquired more than 9% of stake in the company for $68 million. Now, earlier this year, Roshan, Zomato had also said they would invest as much as $400 million in the Indian quick commerce market over the next 2 years. And with this merger, right, Zomato is actually entering a space which has seen immense traction in the last few months with Zepto, with Instamart. Yeah. How do you think this is going to change the ecosystem?
I think from a Zomato perspective, right, I mean, their core business, I think the growth is kind of slowing, right, in terms of number of users and so on. and the average order value also remains fairly constant. I think 250 to 400 between that itself, right? And they have to look at other avenues. I mean, they've invested in Shiprocket, Magic Pin, and so on. We discussed recently. I think they acquired an NBFC license, right?
Yes, yeah.
Right, and they plan to invest another $1 billion in startups. They will have to kind of look at these inorganic modes of revenue, acquiring revenue, right? And Blinkit, on the other hand, has had it really hard for the past few months or few years, especially after Zepto, right? Zepto changed the game with this whole 10-minute delivery thing, and all of these folks had to adapt. And there were talks of Blinkit having closed about 50 warehouses, laid off a bunch of people, outstanding bills to their vendors, and so on, right? So they've had to adapt, and they're burning like a hell of a lot of cash as well. So for them, it was a case of needing a war chest, and then for Zomato, it's a case of acquiring or inorganic revenue. And of course, there are a lot of symbiotic things with both these businesses, right? I mean, they can share a fleet, for example, right? Of all the logistics, technology, infrastructure can be shared. But even so, grocery is a very, very difficult business, right? Because the order value is, like really small. Blinkit had started charging for, those 10-minute orders, and they started the subscription service and so on. But still, I mean, it's really hard. I mean, I remember, a line from Shark Tank where I don't know if it was Ashneer Grover or someone who said that India mein, 250 rupees में deliver करके कुछ पैसा नहीं कमा सकते हो, right? That types, and which is absolutely true. I mean, what are the kind of margins that you have on MRP goods, no less, right? So it's a tough business. I mean, you will expect a lot more consolidation in the space, right? And that's what you're seeing.
It was also interesting that see all the existing market players, they are mostly into grocery deliveries, right? But later on this year, we'll probably see Swiggy also IPO, and of course, Swiggy's and Zomato's both their core business is on food delivery. That's how they earn majority of the revenue. And with this merger, Zomato is talking to its restaurant partners to pilot a project where they can deliver food in 10 minutes. So that would be like really interesting. And to build on that, Zomato board has also approved an acquisition of 16.66% in Mukunda Foods, whose founder we have had on the podcast.
Yeah.
Mukunda Foods specializes in food robotics to automate the designs and manufacturing of food preparation for restaurants, enabling them to scale rapidly and at the same time maintain consistency.
Yeah.
So this might play out interestingly.
Yeah, definitely. I mean, one of the things that I felt after talking to Ishwar of Mukunda Foods some time back was how the hell has no one noticed the business yet, right? I mean, they've just been silently building away, and it's a fantastic business. They have something called a Dosamatic. They have about 8 different machines, and the Dosamatic in particular has been deployed in plenty of different places. Tens of thousands of units sold. They've expanded to Australia as well. And especially during COVID, when all these cloud kitchens and everything came up, I mean, these guys really did well, right? And they're the present and the future, if you ask me, right? So these kind of investments and acquisitions really, really make sense, and robotics with food tech, food automation, especially with cloud kitchens and so on, it's really, really going to take off for sure.
Yeah, and nowadays you're seeing more number of home cooks who are actually like subscribing to cloud kitchens, right? For them also it like opens up a really nice market.
Yeah, I mean, so this has been like this has been a pipe dream, right? Where a chef can just cook and, not worry about all of the other aspects of a business. And, 2012, 2013, there were a couple of businesses that tried to do this, but the logistics and the technology in the market hadn't caught up yet. We will get to that place. We will definitely get to that place because, see, in this whole schema, right? I mean, food still has the highest margin. Because I mean, there's not much of margins on all these consumer goods anyway. The one that you're selling at MRP anyway, right? So yeah.
Nice, interesting. So a new week, a new unicorn, Amagi, which is a cloud-based SaaS technology for broadcast and connected TV. They raised $95 million round from Axel and existing investors. In addition to being a unicorn, this also makes Amagi the highest valued media tech companies worldwide. They have seen a 59% surge in customers onboarded in 2021, and a 112% increase in year-on-year growth in ad impressions generated on the platform. And their customers are also like, they have a stellar customer list. It includes NBC Universal, Paramount, TasteMade, USA Today, AccuWeather, and more. So now with the lockdown, we have seen the rise of OTT platforms. I mean, I don't remember the last time I've actually watched cable TV. So do you think services like Amagi is what the future is calling for?
Yeah. So Amagi is a phenomenal business, right? I mean, it's a 14-year story in the making. Given how quickly people are turning unicorns, companies are turning unicorns these days. I mean, it might seem like a long time, but look, Amagi basically helped media businesses adapt to the cloud, right? I mean, they offered the cloud computing infrastructure and the leverage to media businesses. Now we know that, media perhaps consumes the highest amount of bandwidth, compute, storage, and so on, right? I mean, probably this podcast that we're recording will probably be a couple of gigs at least in space, right? And if we're doing it live, I mean, that means, it has to be streamed, low latency, all of that
It
stuff.
needs to be compressed without losing the quality of the stream.
All of that, right? I mean, so it's a very tricky problem, right? 14 years back, Amagi started on the premise that, hey, I mean, all your media companies with all of these rich content, libraries, all of that, I mean, you can put it on the public cloud, right, with our help, and do a bunch of things around it, right? I mean, like, for example, insert ads. So they have a product called Thunderstorm, right, which helps people insert ads dynamically in specific places in the video and everything. So yeah, it's a really phenomenal business. I mean, the founders are all stellar. All of them were probably, I mean, batchmates in engineering, were again colleagues at Texas Instruments, built a business called ImpulseSoft in the audio space, which got acquired by Surf Technologies, and have been plugging away at Amagi with for about 14 years, right? So really, really good business actually.
So with platforms like Amagi, right, talking about the specific ad insertion, this is also a step up from the traditional way mass advertisements were done.
Yeah, not just advertisements. I mean, it's content itself, right? I mean, if they can tailor advertisements, then they can tailor content as well. And I think that is the goal, in fact, right? That they will get to that point. I mean, they have plenty, and the good thing about the business is that they serve so many different stakeholders, right? I mean, they serve the platforms, the content creators, the advertisers, plenty of people, and multiple revenue streams as well. So in fact, I mean, interestingly, I was listening to the founder speak on one of the interviews, and he had said that initially the problem was getting people to say yes, right? I mean, because the advertiser will say, hey, do you have the platform? And the platform will say, do you have the advertiser, right? And now, I mean, at this stage of the business, I think it's that whole virtuous cycle, right? I mean, where you have multiple of these different stakeholders you're earning revenue from. So amazing business, and I think it's just going to gain ground more and more, because you see the kind of companies that they have, right?
I mean,
as clients.
they have it across all different types of segments, right? They have it in large media conglomerates, they are in connected TV, and they're also in content owners like AccuWeather and stuff.
Yeah. No, and the amount of screen time has increased so much, right? I mean, post 2020 especially, and not just the amount of screen time, the number of screens itself has increased. So Amagi is going to be more and more relevant, in the future.
So Holi this year also marks 2 years officially of us working from home.
Oh,
right?
wow.
It's lockdown, and then we started working from home, and to that front, Microsoft has released its second annual Work Trend Index report, and it's called the Great Expectations Making Hybrid Work. So in the report, there are mainly 5 key takeaways, right? And this is what people want out of work and what they're willing to sacrifice for the job has completely evolved. They say that 2 out of 3 employees in India say that they're more likely to prioritize their health and well-being over work than
Surprise.
pandemic. Also, managers feel they're somehow wedged between the leadership and the employee expectations because they're the first line of interaction a new employee would have with the company. But also as a result, 73% of business leaders are concerned that the new employees aren't getting enough support to be successful during hybrid work. And 71% of people who changed companies during the pandemic say that they might change employers again in the next year. This also is a time to rethink the role offices play and adopt a degree of intentionality of when to call people to office, when to schedule a meeting, and what to discuss in a meeting.
Point taken, Gunjan.
I'm sure my manager would be listening to this podcast, and then she'll be thinking, okay, yeah, we should rethink our morning check-ins. But yeah, I mean, this is what the new normalcy we are talking about, right?
See, the obviously this hybrid and remote has plenty of different positives, right? I mean, as you can see, I mean, we
I get to spend
have,
more time with my dogs.
yeah, right, and there's a lot of flexibility, a greater degree of me time, and so on. But I feel like the two most impacted are managers and new hires. Managers, for obvious reasons, I mean, they have to manage their team remotely, and that is a huge challenge by itself. And new hires, man, I mean, there's no question of learning from osmosis, and how do you relate to people, culture, processes, organizations, when you haven't really met them. And all of us are trying to learn, all of us are trying to do our best, I suppose. For me, what is being productive? Is being productive doing 12 Zoom calls or 15 Zoom calls a day? Is being productive, having more than enough, like, I don't know, 2 or 3 meetings more than what you would do normally? What is productivity? I don't think productivity is that, right? I mean, yes, of course it does increase to a certain extent when that happens, but then I think there's diminishing marginal utility at this point of time. In fact, I think it's really affecting all of us. I mean, it's not making us creative, it's not even making us efficient, I would say, right? So it's important for us to kind of figure out a nice median where we use work from home for all of the work that we have to get done without any interruptions, and at the same time for any meaningful collaboration and so on, we are hands on, we're working at the office. I'm reminded of this one line that a colleague of mine said in this whole work from office, work from home debate, right? I mean, it was pretty profound, actually. I mean, it made me think. He said, look, let me paint a scenario. Assume that we're building a rocket to Mars. Would we work remotely? I mean, and that's a real question, because I think any meaningful work, right, especially startup work where a bunch of people getting together to get stuff done, yeah, you have to be in the same room, man.
Yeah. No, also, like, I want to elaborate on the point, where business owners are getting concerned that employees might leave. We have seen what's going on with the whole great resignation movement. But if you just flip the coin, a great resignation could also mean the great return. Because people who are quitting companies,
Good point.
they are
Yeah.
likely to, I mean, they're likely to move to a similar field in a different company, right?
Yeah.
So you think we're entering some sort of like a virtuous cycle now with the entire work from home becoming the normal?
No, same set of people will keep moving around. See, it's difficult. I mean, careers have changed, and I feel like if you're smart about it, you will make the most of it. If you drift, then I mean, this is a very bad time to drift, really, because months have turned into years, and we've been locked up for a couple of years almost, right? And so, yeah, I mean, I would say, just whether you're an employee or an employer, be really conscious of it, and try to make the best of the situation.
Right. Alright, so moving on, in a first of its kind, Manipal Hospital has partnered with Connected Life and FitBit to offer wearable devices to its patients. The hospital will be bringing wearable technologies for post-surgery care with Connected Life's virtual platform. Now, with connected devices, doctors can remotely monitor, heart rates, blood oxygen levels, and activity metrics like how they're sleeping, how they're breathing. This adds an entirely new layer
Yeah.
to how the insurance space might evolve, and also drives like how the interaction between a doctor and a patient will change. So
Yeah.
how do you see this evolving?
No, yeah, I mean, this changes patient care big time, right? Because see, oftentimes it's not just the patient. I mean, it's a huge pressure on the caregiver, right? I mean, to measure these different metrics and like to be on top of things, and it's a tremendous pressure, actually, right? I mean, and something like this makes it a lot more simpler in that sense. The doctor and the patient are more connected, right? They could perhaps, I mean, have these alerts and interventions. It makes the whole experience a lot better, I would say, right? So one of the things that I have been thinking for long is, why don't hospitals and existing conventional healthcare companies start investing in startups, because these are innovation that I mean, that's available. I mean, it's been there for a while, right? So it's good that Manipal has taken a step in the right direction in that sense.
Yeah, so with this, Manipal Hospital plans to onboard up to 10,000 patients in the first year of this partnership. Another very interesting development was the inclusion of Falguni Nayar's name in the Hurun report, which is a comprehensive evaluation of the wealthiest individuals across the globe. Falguni Nayar entered the Hurun Global Richest in 2022 as India's most successful self-made women. Other people in the list include the likes of Mukesh Ambani, who is the richest Indian right now, and there are total 24 new entrants in the top 100 list globally. So, I mean, we have seen how the bumper IPO which Nykaa had, right? And yeah, I mean, huge shout out to Falguni Nayar for being included in
By the way, the
list.
Nykaa stock is up 15% in the month. Huh?
Yes.
Yeah. So if you invested in the dip, then, well, good luck to you. But yeah, what a fantastic story, man. I mean, she still owns 50 plus percent of the company, right? And that is really, the biggest vote of confidence, I feel, that from investors as well, right? Yeah, she started Nykaa when she was 49, right? And it's such an amazing lesson. We often talk about, entrepreneurs out of college and early 20s, etc. This is a fantastic lesson in starting up, as a senior executive and so on. And she's doubled down. So, yeah, amazing. And excellent role model for young women also. Yeah.
Right, yeah. So let's move on to the other headlines from the week. Richest, which was the first Indian D2C brand to enter the Unicorn Club, they raised another significant round of venture capital. As part of its Series F round, the company bagged $150 million, which was led by Amansa Capital along with Kotak, PE, and Access Growth Avenues. This is just after 6 months they became a unicorn. It's very interesting to note that. Bluestone secured over $30 million in a round, which valued the company at $410 million. And this round was led by Sunil Kant Munjal, who is the chairman of Hero Enterprise. Upscaleo, that is a roll-up e-commerce startup, has landed a $15 million of pre-series B round, which was led by Gulf Islamic Investments. This fundraise comes 7 months after it had secured a $42.5 million Series A check in August last year. Over the last 9 months, the company has built a portfolio of 13 brands across categories such as home and kitchen, furniture, auto accessories, and lawn and gardening. Now, this category especially, right, the roll-up e-commerce has been seeing immense traction. We have been talking
Big
about
time.
Mensa brands.
Yeah.
We have been talking about Upscaleo.
Yeah.
And
Yeah.
we have seen what the likes of Thrasio has done in the West.
It's hard to scale a D2C startup, man. I mean, really, it's super hard to scale a D2C startup. And what these folks are doing is to bring that playbook and share it amongst a common set of companies, right? Their portfolio, basically. And I saw the team as well at Upscaleo. I mean, all of them, a couple of them are senior consultants. One of them was at the helm, chief growth officer at, I think it was Shop Clues, right? So you have all of these senior people available, and plus, I mean, they have experts in digital marketing, in procurement, sourcing, all of these different things, right? I mean, so you are able to, adopt all of these benchmarks and standards, which for you to realize and like adopt and imbibe into your business would have taken a heck of a long time, right? So yeah, I mean, it's a fantastic thing, I mean, it also has a second order effect, right? I mean, obviously more brands, more people will start, companies and so on. So it's definitely good. I did see the portfolio. I mean, they have different brands, right? I mean, auto you mentioned, they have someone was making ergonomic chairs, backpacks, kitchenware, very diverse, right? So yeah, I mean, I really hope that more and more people start stuff in the consumer goods space. I mean, we'll have some very interesting choices after all, because oftentimes when you start in this space, right, I mean, then it's a Herculean task, right? I mean, because oftentimes whether it is kitchen, whether whatever, you're going up against really large incumbents. And so I feel this kind of support is critical. I mean, it's really amazing. Bluestone is an interesting story, because Bluestone was actually growing at a faster rate, and they had to kind of scale down because of their burn and stuff. And you remember last time we spoke about Unacademy opening up
A
physical
experience
outlets.
center.
Yeah, exactly. And one of the learnings Bluestone has had also is the fact that they need physical stores, right? I mean, I think the founder mentioned, like, for every one person who tries stuff out online, there are 5 or more people who are buying off their own customers who are buying offline, right? So they plan to set up, I think, around 300 stores. They have about 70 right now. They're doing about 500 crores of revenue. They plan to target around 2,000 crores of revenue. And it's very interesting because earlier they had this try it at home kind of an option, which was also a very big burn for them. And now they've realized it really makes sense to have retail outlets, right? And so they're growing through franchisees and so on. And one of their competitors is Carrot Lane, which is owned by Titan, right? So interesting business for sure. And Licious. Well, we've spoken about Licious earlier, right? I mean, and we've mentioned, how the demand for meat is always a lot more than supply. And they're really streamlining, automating a very, very fragmented, sort of scattered supply and value chain, basically. And there's just so much of money in this, in that ecosystem, really, to make, right? Because it's a very unique dynamic to have demand more than supply. So yeah, I mean, they will raise a lot more money. They will stay private for a longer time, I feel personally, because there's still a lot of work left to do in that ecosystem. Yeah.
So very interesting tweet was put out by Balaji Srinivasan, especially with the timing with the whole Russia-Ukraine conflict. He says he has been writing a book on how to start a new country, and that book is now available for pre-order. It will be arriving on July 4th. I'm sure you have done some research on this book and you have been following Balaji Srinivasan very closely.
Balaji runs this fantastic newsletter and blog called 1729. You guys should definitely check it out. And he has spoken about this network state, right? I mean, how to build a country. Imagine if you were to build a country, what is the way to go about it, right? And he lists all these various options, elections, revolution, and so on. And the network state or through the cloud is one of his unique proposals, right? Where people form a community online and then...
Are you talking about things happening in the metaverse?
No comments. Yeah. But basically, yes, on the cloud, right? People form on the cloud and figure protocols, figure, rules of governance and so on, and then acquire land as a land last strategy, right? So he's spoken plenty about it. And look, Balaji is like a super original thinker, right? I mean, I remember watching his talk on exit, how to exit a state, right? I think, and it's given in 2013 at a YC event. I mean, it's remarkably, futuristic. He's a real original thinker, and his ideas on, how things will change 20, 30, 50 years from now is just real. It's so real. I mean, it's actually a bit shocking, right? And the book has made it to number 4, I think, on Amazon's ratings. And he was kidding about how, number 4 or probably number 2, I think, at this point of time. He was kidding about...
Unpublished.
No, there's a Kindle version out.
Okay.
There's a Kindle version out. I think the paperback and hardcover may, come out later. But yeah, I mean, it's pretty amazing how it's climbed to, the top 5.
Topping the charts.
Yeah, and the only ones that are over this are some romance novels, right? So yeah, I mean, there's been a lot of interest around this. So do check it out. Like, share, RT, all of Balaji's stuff. He's definitely working on something interesting and important. Yeah.
Maybe one day we can have him on the podcast itself.
Yeah, for sure. I mean, I've had him on Bharat Varta earlier, right? Talking about COVID, and yeah, it was a great experience. Yeah.
Right. So, more episodes coming up this week. You've already spoken with Saurabh Saxena, who is the founder and CEO of Uable. And I think the part 2 of Jen's masterclass on B2B sales will be published this week.
Yeah.
But let's talk more about what's the thought process behind having these masterclasses.
Yeah, I mean, it's an interesting question, I mean, so Saurabh we've hosted earlier, Jen we've hosted earlier, and I thought it could be a different format where we pick the same guests and perhaps talk about one specific thing that they're really experts at, right? Now, Saurabh is a 3-time entrepreneur, former founder of Vedantu, and he has done an interesting pivot, right? I mean, last time we spoke to him was late 2020, and Uable was an edtech startup that focused on teaching higher order thinking to children, like creativity, problem solving, and so on. And since then, I mean, they pivoted to being a social app for teens. And I went into the depth of why pivot, how to manage a pivot, how to communicate, how to structure teams differently for a pivot, and so on, right? And I think it's extremely important people understand the mechanics of a pivot, because so often I think when you go out there in the market, your first idea may or may not resonate, and you have to really think quickly, because what you have is the team, right? Everything else is basically fungible. So, which is what, I mean, Saurabh has done. I mean, they've pivoted around this team to building this social app for teens, and they have phenomenal success as well. I think 10 million plus downloads and so on. So yeah, I mean, do check out that masterclass on how to manage a pivot with Saurabh Saxena. The other episode is, of course, with Jen. Last week we put out a sales masterclass with her, and we're going to continue that this week as well. And this week I think she's going to focus more on customers, right? Which is, how do you validate a need, how do you get them to pay, how do you scale, how do you do discovery, plenty of those things. And yeah, I mean, it was a fantastic conversation, definitely a must watch for any B2B SaaS founders out there.
Yeah, and definitely we'll be putting up these episodes as a playlist on YouTube as well, so do check them out. But yeah, so that's it for this week's roundup. Thanks a lot, Roshan, for those amazing insights. And folks, don't forget to share, like, and comment on the video and the podcast. Do rate us on your favorite podcast platform app. That really helps more people discovering our content. And in the description below, you'll see our WhatsApp link, which is where we send in like regular bites, what's happening, and behind the scenes stuff. So do subscribe to that. And until then, we'll see you again next Sunday.
See you guys. Thanks so much for joining us.